Hello friends, how are you all? Hope you all are doing good. So, most wanted chapter for all the students. I know you are eagerly waiting for uploading. So, this is the time for discussion of the chapter Consolidated Financial Statements. So, before starting with this chapter, just I want to provide a small information exclusively regarding to this chapter. Consolidated financial statements, the topic itself is very big topic, very huge concept actually involved in this chapter. But the entire conceptual things related to consolidated financial statements is not covered through CA inter syllabus. Very limited portion of consolidated financial statements only covered in CA inter advanced accounting portion. Why I am emphasizing that fact before entering into the topic itself? So many students have a myth that the chapter consolidated financial statement is very big chapter. Sir, the remaining portion, what you are not learning at this stage, you would have learned in CA final syllabus. And there in CA final, you are seeing the consolidated financial statements based upon Indian accounting standards, that is Ind AS, not as per existing accounting standards. So that's why very limited discussion we are going to do due to constraints in the syllabus coverage. Okay, fine. That is more than enough. But even though that syllabus is very limited, for coming to CA interlevel, it is look like a huge syllabus only. Okay, fine, right. So now I don't want to discuss anything about the text at this stage. First, let me give in detailed introduction for the chapter Consolidated Financial Statements. So now let us start our discussion with introduction. Can you please tell me, anyone, what is the meaning of consolidated financial statements? What is the meaning of consolidated financial statements? So most of the times in other chapters, in the other syllabus, maybe the other faculty may tell that, sir, if a company is having one or more subsidiary companies, then holding company will prepare, along with their standalone financial statements, it should also need to combine the financial components of their subsidiaries as well. Such financial statements are in generally known as consolidated financial statements. Am I right? In layman, most of the times you would aware that maybe in other subjects or maybe in teaching methodologies of other faculties as well, right? But what exactly the meaning of consolidated financial statements? Now I'm going to discuss here. Concentrate. Consolidated financial statements are simply financial statements of group companies. Financial statements of group companies. Yes. Consolidated financial statements are also financial statements of which companies? Not a single company, which is a combination of companies under a single group. Under a single group. Then the next question coming into your mind is, sir, which companies are known as group companies? Which companies are known as group companies? Sir, group companies means a company who is having controlling power in the other company. I mean, holding company, and one or more subsidiary companies. One or more subsidiary companies. So group companies means either it is holding company or one or more subsidiary companies. Now, one more important thing you need to know here, subsidiary company includes associate and joint venture only for consolidated financial statements. I'm talking only for consolidated financial statement point of view. Subsidiary company includes associate and joint venture. I mean, if a company is having subsidiary, one subsidiary or more than one subsidiary, and the same companies also have associate, or the same company is acting as a joint venturer for other venturer companies. Now, the holding company, along with their standalone financial statements, it should prepare the consolidated financial statements after taking the components of the financials from subsidiary companies as well as associates and joint ventures. Such financial statements are popularly known as consolidated financial statements. Okay, this is only pure meaning just now I discussed, sir, but without knowing reason for preparation, whatever you learn, such things are completely waste of time from my point of view. So without knowing the reason for preparation, how it should be prepared, it is completely waste of time, right? So first we check now simple meaning. Now we are checking why we need to prepare. That is reason for preparation. Reason for preparation of CFS. So in shortcut, I am using regularly CFS. Please all of you habituate for the terminology. Now, reason for preparation of consolidated financial statements. Sir, you know, in case of holding subsidiary relationship, what will happen in generally? Let me take one example for better understanding. For example, H Limited is a company which is a holding company. S Limited is another company which is a subsidiary company. Am I right? There are two companies are there. One is H Limited, another one is S Limited. So in between H Limited and S Limited, there is one relationship exists, that is holding and subsidiary relationship, right? So H Limited is a holding company. H Limited is a holding company. S Limited is a subsidiary company. The relationship is a holding subsidiary relationship. How that relationship will exist when a company is known as holding company, when a company is known as subsidiary company? Subsidiary company is a company in which the other company controls the composition of the board of directors. Either it controls the composition of the board of directors, control in the composition of the board of directors. Sir, what is the meaning of control in the composition of board of directors? The entire board will follow the decisions of the holding company. Holding company will involve into the operation and financial decisions of the subsidiary company. The board of directors decision are completely depending upon the decisions taken by the holding company H Limited. Then H Limited is said to have control on the composition of the board of directors. And one more thing, it is in the hands of the holding company to appoint any board of directors or to remove any such board of directors. So if such characteristics are satisfied, then in generally we are said to be holding company have control on the composition of the board of directors. Do we agree, guys, all of you? Okay. So this is one scenario of getting holding and subsidiary relationship. Another scenario is, you know, majority of voting power. Majority of voting power is in the hands of H Limited, then the other company is known as subsidiary company. Hope you already know such facts in your, you learn such things under Companies Act 2013 itself. You already learned such things under Companies Act 2013, or in our some accounting standards like AS 18 in case of disclosure of what is that? Related party disclosures. We already discussed such issues. Am I right, guys? Okay. Now, sir, you know what is the meaning of associate? Associate means a company is having substantial interest in the other company, or it holding greater than 20% of the voting power in the other entity. Then we can call it as investor and associate. You already named joint ventures and venture relationship. Okay, just leave it. One more thing. Before explaining the reason for preparation of consolidated financial statements, I want to tell you one more thing. In this chapter, we are only going to see one type of consolidated financial statements relationship, that is holding and subsidiary only. Holding and subsidiary only we are going to see. Holding and associate, I mean investor associate consolidated financial statements, we are not at all discussing. Venturers and joint venture consolidated financial statements also we are not at all discussing. Sir, if such two things are not at all discussing, then combination problems will not come. Combination means holding subsidiary plus investor associate plus a venturer joint venture. Such combined problems also we are not going to see. I already told you, very narrow scope, only holding and subsidiary relationship, consolidated financial statements only we are going to see. Is it okay, guys? Now come back. Sir, what is the reason for preparation of consolidated financial statements? Now, the entire affairs of the subsidiary company is in the hands of holding company, or whatever the profit or loss achieved by the subsidiary company, for that holding company is the cause. Am I right? So because holding company involves in the decision making of the subsidiary company, that means the majority stake in the subsidiary company, the majority stake in the subsidiary company is in the hands of the holding company. It is the responsibility of the holding company to provide the financial information to the users of the holding company by considering the financial statements of the subsidiary companies as well. Because the real financial result of holding company or the real financial position of the holding company is not only depending upon exclusive holding company affairs, it also depending upon affairs of the subsidiary company. So group as a whole, how much financial result we achieved and what is the financial position, I need to clearly visualize to the users of the financial statements. Because based upon the overall performance of such group, investors of the holding company want to take appropriate decisions on making further investments or withdrawal of the existing investments. And the market price of the holding company will also depending upon the results of the subsidiary companies as well. Do you understand? In practical way, if I want to tell you to visualize the things in the better manner, you know the group called Reliance Industries Limited, right? RIL is a holding company. RIL having various subsidiary companies. So just let me Googling that. So please come here. If you check here, RIL related subsidiary companies. So now just he is giving only major subsidiaries, not all the subsidiaries. The subsidiaries that make Reliance Industries successful, just he is giving certain subsidiary companies. Just have a look. Geo Platforms Limited, Reliance Retail Limited, Reliance Life Science, Reliance Logistics, Reliance Clinical Research, Reliance Solar, Network 18, Relicord, Reliance Geo, Reliance Industrial Infrastructure, Reliance Aeros Production, LYF. So many other companies are also there. Here he only given major subsidiaries of the Reliance Industries Limited only he is giving. Am I right? Come back, guys. Reliance Industries Limited doing multiple business activities. It have their place in retail sector. It have their place in petroleum products. It have their place in textile market. It have their place in telecommunication system. It have their place in whatnot. I mean, tell me guys, some other products related to Reliance Industries Limited. Yes, oil related activities, it have their place, and it have their place in, I mean, broadband network. That is broadband network also they entered, right? Then so it have their vast and a huge hands in all and around all the industries. Am I right? Okay, come back now. To know the real performance of the RIL group entirely, you should combine the financial statements of each and every company and put together in the form of consolidated financial statements. Then users of the financial statements will look into such consolidated financial statements. Then they will take the appropriate decisions. That is the actually backbone of the decision making by a particular investor. So in generally, investors are not only taking the decisions simply based on the price fluctuations. Sir, price decrease na, invest. Sir, at the time of increase of the price, we will get profits. That is actually doing the layman people. So how in generally the financial people who are having the good knowledge about the financials, first what they will check, they will analyze the financials. Now, such analysis is possible for a group through preparation of consolidated financial statements. That is the reason why in generally people are going for preparation of the financial preparation for consolidated financial statements. Not only that, through preparation of consolidated financial statements, entity have certain advantages as well. I will let you know what are the different advantages company have through preparation of consolidated financial statements. You know the intrinsic value per share, right? Intrinsic value per share. You would already seen such things under amalgamation chapter. Sir, intrinsic value is nothing but net asset value of the per share. Net asset value per share. Net asset value per share means total of the assets minus total of the liabilities at market values. At market values. Now, out of the total of the assets, you are having certain investments which are invested in subsidiary companies. Are you visualizing the things? You are investing certain shares of the subsidiary company which are investment in subsidiary. Now, what is the value of investment in subsidiary? It is depending upon the worth of the subsidiary company. If you know the intrinsic value per share in the subsidiary company, then you can apply such value of investments is nothing but intrinsic value of the subsidiary companies. That means the real intrinsic value of the holding company will only knows if you are able to calculate the intrinsic value per all the subsidiary companies. That means the intrinsic value of the holding company decides or depends. The intrinsic value of the holding company depends on the intrinsic value of all the subsidiary companies along with the performance of the holding company. So that is one of the advantages to know the realistic intrinsic value per share of the holding company. By not considering the intrinsic value of the subsidiary company, if you are valuing the intrinsic value of the holding company, you may derive the wrong value. You may get the wrong value. So that is possible through preparation of consolidated financial statements. Next, one more. Sir, consolidated financial statements are also help highly. Consolidated financial statements are also help highly to know the profit or loss in the overall picture. Sir, current year I attained 5 crores profit and my subsidiaries attained 15 crores profit. Now, what is the overall profit of the group? What is the overall performance of the entity? Such thing also we know through preparation of consolidated financial statements. Okay, we see such all are advantages through our text. So let us have look into our text, guys, without wasting much time. Sir, consolidated financial statements, CFS are the financial statements of a group presented as those of a single enterprise. So which resulted consolidated financial statements are financial statements of a group companies which are presented as a single entity, which are presented as single entity. Such group companies, if you are presented as a single entity, how the financial statements will look like? Such financial statements are known as consolidated financial statements, where a group refers to parent, that is holding, and all its subsidiaries. Here, subsidiary includes associate and joint venture as well. Only for the consolidated financial statements, we include subsidiary, we include associate and joint venture as in the definition of subsidiary. Okay. Purpose of preparing the consolidated financial statements. Parent company need to inform the users about the financial position and the results of the operations of not only of their enterprise, that is not only of that individual enterprise, but also of the group as a whole. For this purpose, consolidated financial statements are prepared and presented by a parent or a holding enterprise to provide the financial information about the parent and its subsidiaries in a single economic entity. I discussed already. Sir, what is the meaning of holding company? What is the meaning of subsidiary company? I already discussed it through this small diagrammatic representation. I don't want to read once again. Just you can see the subsidiary company. Holding company means the company which hold in the subsidiary company is nothing but holding company. That is the definition actually given. Holding company in relation to one or more the companies means a company of which such companies are subsidiary companies. Simply a company which hold or which invested in the other companies are known as holding company. Come to the subsidiary company. Control the composition of the board of directors. Subsidiary company as a company in which the holding company controls the composition of the board of directors or exercises or control more than one half of the total share capital, either its own or together with one or more of its subsidiary companies. Maybe directly you can own or indirectly through of your other subsidiaries also you can own. We've seen already such type of relations under related party disclosures. I don't want to make a comment here again. So the controlling power you may have directly, or maybe certain portion you hold, maybe the remaining portion you can hold with your subsidiaries as well. That is having directly controls or indirectly controls. Anything we can call it as controlling power. I already discussed. Next, one more thing, guys. Sir, for example, H Limited hold in S Limited to the extent of 90% of the share capital. I mean, S Limited share capital is 5 lakhs. Out of such 5 lakhs, 90% is held by H Limited. That is to the extent of 4,50,000. Remaining 50,000 worth of share capital is held by outsiders. Such outsiders are known as minority interest holders. We are the majority interest holders. Majority interest holders means holding company. Minority interest holders means other than holding company, outsiders who invested in the equity shares of subsidiary company are known as minority interest. Now, minority interest, it is the part of the net results of the operations and that of the net assets of the subsidiary. Simply, I can put net assets of the subsidiary attributable to interest which are not owned directly or indirectly through subsidiaries by the parent. Simply is giving what is the meaning of minority interest. It is the interest other than owned by the subsidiary. It is the interest in the net worth of the subsidiary other than owned by the holding. That is simply, I told it as held by outsiders other than subsidiary. Okay. Next, just leave it. 1 second, guys. Just I will check the advantages. Just give a moment, please, all of you. Yeah, here it is there. Please, all of you concentrate. So the reason for preparation we've seen. Now certain advantages I'm going to explain here. What are the different advantages a company will get through preparation of consolidated financial statements? A single source of document. The consolidated financial statement is a single source of document. Then the users of the financial statement can get an overall picture of the group. I told you the overall picture of the group we can simply know through preparation of consolidated financial statements. Intrinsic value of the share. So the intrinsic value of the holding company will also depending upon intrinsic value of other subsidiaries and associates and joint venture. That's why we know the true value of the holding company in the consolidated financial statements only. Intrinsic value of the holding company can be calculated directly from the consolidated balance sheet. Acquisition of a subsidiary. For example, now in this case, let us assume holding company, that is H Limited, want to acquire the S Limited. As per my example, H Limited hold 90% in S Limited, right? Now in S Limited, I know the minority interest portion as well. Remaining 10% is related to minority portion interest. So if H Limited wants to acquire S Limited, how much amount I can able to pay to the minority interest, I can easily assess. Sir, no need to pay the entire amount as a purchase consideration, because H Limited is already having the controlling interest. Almost 90% belongs to H Limited only. Now H Limited, if it will pay the remaining 10% portion of amount to the minority interest, then H Limited can easily acquire the subsidiary limited. I mean, through preparation of consolidated financials, H Limited can easily know a fact that how much amount we can need to pay to the minority interest for the purpose of acquisition of subsidiary limited. The minority interest data of the consolidated financial statement indicates that amount payable to the outside shareholders of the subsidiary company at book value, which is used as the starting point of bargaining at the time of acquisition of a subsidiary by the holding company. We know the book value of minority interest. That's why we can easily simply bargain with such minority interest holder at the time of acquisition of such company. Next, evaluation of holding company in the market. The overall financial health of the holding company can be judged using the CFS only. Sir, we cannot judge the performance of a holding company based on the results of the holding company. Maybe the holding company results are very poor, but the subsidiary companies are performing in outright the benchmark performance they are giving. Then the overall group is performing very well, even the holding company is failed in their operations. Do you understand what I am telling? So that is the reason why the overall performance of a group only the people in generally will see at the time of making investment in such shares. I mean, maybe certain subsidiary company, maybe operations are very low. Let us assume the telecommunication sector is in the recession period. Let us assume, or the technology, I mean the software company, one of the subsidiary is in the recession period. But still that financial statements not only depicting, by seeing the results of such financial statements, it does not depict the true and fair picture of the group as a whole. If you check the overall financial statements results only, then you have a good idea whether the group is performing well or it is badly impacted. We can easily know. Okay, come back guys, all of you. Now till now we discussed that what is the meaning of consolidated financial statements, why it should need to be prepared, what are the advantages of preparation of consolidated financial statements. Am I right, guys? Now, what are the different components involved under the consolidated financial statement? Let us have a look. Now I'm checking components of CFS, components of consolidated financial statements. Consolidated financial statements contains consolidated financial statements contains consolidated P&L, consolidated balance sheet, consolidated cash flow statement, consolidated notes to accounts and explanatory statements. So in generally, financial statement comprises of P&L, balance sheet, cash flow statement, right? And notes to accounts are also form part of financials. Now everywhere I added simply the word consolidated. Consolidated P&L, consolidated balance sheet, consolidated cash flow statement, consolidated notes to accounts. In this chapter, we are going to learn except consolidated financial cash flow statement. Remaining all things we are going to see. Except consolidated cash flow statement, we are going to see consolidated balance sheet, consolidated P&L, and consolidated notes to accounts. Whenever we are saying balance sheet and P&L, it is automatically we are going to see consolidated notes to accounts as well. Is it okay, guys, all of you? Next. So just now we've seen different components, what we are preparing under the consolidated financial statements. Next, before checking with the accounting treatment, still, please let me allow to discuss certain provisions of the Companies Act 2013. Now, this is not related to accounting treatment. This is not related to accounting treatment. This is related to compliance part. As per the provisions of Companies Act 2013, a company who have subsidiaries or associate or joint venture should need to prepare the consolidated financial statement. Should need to prepare the consolidated financial statement. Now, these are the provisions of Companies Act 2013. Provisions of Companies Act 2013 with respect to compliance part. So a company who have subsidiary or subsidiaries or associate or associates or joint venture or venturers, then such company should need to prepare consolidated financial statements along with standalone financial statements. So at that point of time, such company should need to prepare their own financial statements as well as consolidated financial statement also. Next, sir, you know already, once in generally at the time of preparation of standalone financial statements, what are all the different compliance procedure you need to be adopted? That is, board of directors will approve such financials. Then after that, along with the financials and audit report on such financials, it will be sending to the shareholders for attending the general meeting. Then general meeting will discuss on such financial statements. After completion of the general meeting, we should need to file the annual returns to the register of companies. We know already such compliance procedure. Now, the holding company or the parent company, along with the standalone financial statement, it should include the consolidated financial statements also as form part of financials. The board of directors should also approve the consolidated financial statements. Now, at the time of sending such financials to the shareholders, along with standalone finances, it should also combine the consolidated financials. Then shareholders will discuss on CFS as well in the general meeting. Then as part of the annual returns, then such company should need to prepare the annual return in AOC 4 form. AOC 4, you know already, I already explained AOC 4 and MGT 7A. AOC 4 is nothing but every company should need to file the financial statement with the ROC in the prescribed form, which is known as AOC 4 CFS. A company who should prepare the need to prepare the consolidated financial statement, then such company should need to file AOC 4 CFS. Okay, that is nothing but annual return. Along with this, they should also need to provide AOC 1, which relates to salient features of subsidiary companies. So what are all the different companies you are involving? What are the features of such subsidiary company? What are the different business activities conducted by such subsidiary company? How the affairs are maintaining in such subsidiary companies? You should provide one more form, which is AOC 1 form. For which companies? For those companies who should need to prepare the financials as per the Companies Act 2013. Do you understand? I'll show you here for better understanding. I'll open my MCA login. Just a second. So now if you check under MCA services, under eForms companies form download, just I am finding AOC 4. Now, if you check form for filing in the highlight portion, form for filing consolidated financial statements and other documents with the registrar for NBFC. This is for NBFC, AOC for CFS, NBFC. Now come down here, where it is. Yeah, here you can come to the second highlight portion. Form for filing consolidated financial statements and other documents with the registrar. This is AOC for CFS. Just now I discussed, na? So form for filing consolidated financial statements and other documents with the registrar after completion of the annual general meeting within 30 days. That form should need to be filed by each and every company. So these all are related to the compliance part as per the Companies Act 2013 with respect to consolidated financial statement. Next question coming into my mind. Please all of you concentrate. This is provision number 1. This is provision number 2 related to annual return. Provision number 3 I'm discussing. Sir, you told you if companies have subsidiary or associate or joint venture, then they should need to prepare the consolidated financial statements. Even though company have subsidiary or associate or joint venture, in certain circumstances, there is no need to prepare the consolidated financial statements. That we can call it as exclusions or exceptions. Exclusions or exceptions for preparation of CFS. For preparation of CFS. Consider guys. Sir, in which circumstances there is no necessity to prepare the consolidated financial statements? In which circumstances there is not necessary to prepare consolidated financial statements, guys? You know already that situation, but specifically you may not recognize that. Sir, all of you concentrate. Now I have totally 6 companies. Let us assume A Limited is there, B Limited, C Limited, D Limited. Or let me put the 4 companies, not an issue. So I have totally 4 companies are there. This is A, B, C, D. How the relationship will be, in between these companies? A is having majority in voting power. That is, let us assume greater than 50% of the voting power. B is also holding greater than 50% voting power. C is also holding D Limited greater than 50% in the voting power. Now for C Limited, D Limited is a subsidiary company. For C Limited, D Limited is a subsidiary company. Now this company is having subsidiary, na? This company is having subsidiary, na? Even though this company having subsidiary, C Limited no need to prepare CFS. No need to prepare CFS. Sir, here you told company who have subsidiaries or associates. This company is having a subsidiary, but actually it need to prepare the CFS as per the provision. But now if you check the exclusion, if that company is actually holded by another company, which is B Limited, then it is the responsibility of the B Limited to prepare the CFS. Then again, B Limited will also check, okay, I have 2 subsidiaries, C Limited and D Limited, fine. But my company is holded by A Limited, then the responsibility will goes to A Limited. Then who should need to prepare the financial statements? Here also no need. Here A Limited should need to prepare consolidated financial statements. This is the first and foremost exclusion. That means B Limited and C Limited are excluded from the preparation of consolidated financial statements, even though such companies having the subsidiary companies. The reason is such companies are ultimately held by another parent company. So at that point of time, there is no need to prepare the consolidated financial statements. Such fact you already known. Number 2, as per Companies Act 2013, company is having subsidiary or associate or joint venture. But if the company equity shares are not listed in stock exchange, either in India or in foreign countries. That means, as per the Companies Act 2013, only for listed enterprises, actually this consolidation is mandatory. I'm telling that exceptions means Companies Act 2013 is not obligating to don't prepare the financial statements. So just it is telling not mandatory. So the mandatory, it's not required compulsorily, but still, sir, my company equity shares are not listed in the stock exchange. Can I prepare the consolidated financial statement, sir? Absolutely. Who will object you? So exclusions or exceptions means, sir, definitely you should not prepare the consolidated financial statement. That is not the intention of the provisions of the Companies Act 2013, which is not mandatory. If they want, they can prepare. So if their equity shares are, their securities are not listed in the stock exchange, either in India or foreign exchange, that is not mandatory to prepare the consolidated financial statement. That is the two circumstances as per the Companies Act 2013. Such provisions are also as per Companies Act 2013. Now come here, guys. Sir, but whenever a company want to prepare the financials due to mandatory requirement or due to the voluntary requirement, you know, when the mandatory requirement is there, you know, even such exceptions are applicable. Even though if they want to adopt the consolidated financial statements voluntarily, they can prepare. Whenever a company wants to prepare CFS, either on the basis of mandatory requirement or on the basis of voluntary requirement, they should need to comply their respective provisions as per accounting standards. Please concentrate. Now I'm explaining the provisions of accounting standards. Sir, in case of consolidated financial statements, holding and subsidiary relationship is 21 is applicable. Investor and associate is 23 is applicable. Joint venture and venturers is 27 is applicable. But we are not discussing anything about investor and associate and joint venture and venturers. That's why our discussion is majorly AS21 provisions. But even though we are not dealing specifically the AS21 provisions, we are applying the provisions of AS24 at the time of consolidation procedures in between holding and subsidiary. Now coming here, what is the first provision I discussed? Whenever a company decided to prepare, CFS due to mandatory requirement as per the statute, due to mandatory requirement as per statute means as per Companies Act 2013, as per statute, or maybe it is excluded as per the Companies Act 2013, but still they are voluntary want to prepare due to mandatory requirement as per statute or voluntary requirement. Should need to comply the provisions of AS21. I'm only talking about holding and subsidiary. Comply provisions of AS21 mandatorily. That is mandatorily we should comply the provisions of AS21. I mean, sir, in case of voluntary requirement also, I'm preparing the consolidated financial statements voluntarily on voluntary basis. But still, if you are prepare the financial statements on voluntary basis, still you should need to comply the provisions of AS21 mandatorily. That means, what is the objective of insertion of this provision in AS21? I will tell you. Sir, whether the preparation of consolidated financial statements is mandatory or voluntary, that is irrelevant for me. But whenever a company wants to prepare the consolidated financial statement, it should adopt the provisions of AS21. That is the background, background story of insertion of this provision. Hope you got it. Next, coming to point number 2, guys. Sir, as per AS21, certain exclusions are given. As per AS21, certain exclusions are given at the time of preparation of consolidated financial statements. You know, exclusions or exceptions means in the following cases. So following cases, no need to prepare CFS. Now all of you please concentrate. As per Companies Act 2013, such company need to prepare the CFS, mandatory, let us assume. Now such company is coming under this exclusion. Then no need to prepare the CFS. I will tell you what are such exclusions, then you can understand very easily. Just a second. Right, consider it, guys. In which circumstances, as per S21, a company cannot consider such subsidiaries into the preparation of consolidated financial statements, or if the such subsidiary having only one, if such holding company having only one subsidiary, then no need of preparation of consolidated financial statements. Now I am checking if a company is having more than one subsidiary, then in which circumstances a subsidiary cannot include in the preparation of consolidated financial statements, or if the consolidated if the holding company is having only one subsidiary, then no need to prepare consolidated financial statements as well. That is nothing but exclusions. We are seeing such exclusions as per S21. Number one, control is in temporary nature. Control is in temporary nature. That is, holding company going to dispose investments held in subsidiary. That is, holding company going to dispose investment held in subsidiary in near future. In near future. Now concentrate. Control is temporary in nature. Now holding company controls the composition of board of directors or may have voting power for more than 50%. Now such control is temporary in nature. Temporary in nature means the investment held by holding company in subsidiary company is only the pure temporary. Only the pure temporary basis. Sir, in which circumstances it is in generally happening, you know? For example, holding company holds, that is, made investments in the shares of subsidiary, which are held it as a current investment, let us assume. Or my company is an investor company. Now such shares are I'm treating as a stock in trade. For all the investors companies, the shares which are the investments which are made in different companies are simply they are treating as pure stock in trade. That means if the holding company is an investment company, then I will treat such investments made in the subsidiary company as stock in trade. At that point of time, I can resell such investment in very near future. At that point of time, such a subsidiary company I cannot consider in the process of consolidated financial statements. Do you understand? That is, control is in temporary nature. Holding company going to dispose the investment held in subsidiary in near future. Next, coming to point number 2. Subsidiary operates in severe long-term restrictions. Severe long-term restrictions due to which it impairs the ability of transfer of funds to holding. The ability of transfer of funds to its holding company. Now concentrate. To holding company. That is more than enough. Sir, subsidiary operates in severe long-term restrictions. Sir, what is the meaning of this severe long-term restrictions? I can give here a beautiful example. Please all of you concentrate. This was not at all explained in accounting standard also. Actually, I also learned such explanation in US GAAP. In US GAAP, it was explained in very beautiful manner. Subsidiary operates in severe long-term restrictions. For example, I invested in the equity shares of subsidiary company. Such a subsidiary company is in the liquidation process. Such a subsidiary company is in liquidation process. Whenever a subsidiary company initiated the liquidation procedure, then the entire affairs of the company are in the hands of whom? Liquidator. Then once the liquidator is the master chef of the kitchen, I mean, if such liquidator is captain of that company, then all the powers, then all the rights are vested with such particular liquidator only. Then at that point of time, holding company unable to control the affairs of the subsidiary company, even though it have the controlling interest. Why? And whenever the liquidation process is initiated in a particular company, then the shareholders of such company are known as contributories. Shareholders will lose their rights as well as their duties at that point of time. Board of directors also will lose their rights as well as their duties also at that point of time. Am I right? So that's why if subsidiary operates in severe long-term restriction means up to the completion of liquidation procedure, it doesn't have any controlling ability. So once liquidation over, company is winding up, then control is zero actually. So due to which it impair means it reduce the ability of transfer of funds to the holding company. Yes, during the liquidation process, at the end, at the final stage, if any surplus is having in the hands of the liquidator, the liquidator will start giving funds to the holding company. So due to which we are unable to transfer funds to the holding company. At that point of time, you cannot consider such subsidiary company in the preparation of the consolidated financial statements. Do you understand? Now here the exclusion is nothing but, so in the following cases, no need to prepare CFS or such subsidiary companies not considered in preparation of CFS. Maybe if the holding company having more than one subsidiary, then particular subsidiary company we are not considering. If such holding company is having only one such subsidiary is satisfies these situations, then we cannot prepare the consolidated financial statements at all. We no need to prepare the consolidated financial statements at all. Do you agree, all of you? Okay, fine. Now, if you observe my discussion, we started our journey with the meaning. Sir, the meaning of CFS is nothing but prepare the financial statements of a group companies by treating it as a single entity. So reason for preparation of consolidated financial statements, maybe it give the true and fair picture of the group as a whole. So various advantages also I told you to know the real intrinsic value per share. It is only possible. Am I right? And what are the other reasons we are seeing for the preparation of CFS? The overall picture of the status of a group we will know through preparation of consolidated financial statement, and the users of the financial statements can easily take the appropriate decisions by seeing the group performance rather than seeing the individual performance. Next, after that, I discussed different components of the financial statements: consolidated financial statements, consolidated P&L, consolidated balance sheet, consolidated cash flow statement, consolidated notes to accounts. Then I discussed about the provisions of Companies Act 2013 with respect to the compliance. A company who have subsidiaries or associate or joint venture should need to prepare the consolidated financial statements along with standalone financial statements. At the time of preparation of annual returns, they need to prepare AOC 4 CFS form. We check that one through MCA website actually. So along with the annual returns, they should also need to provide AOC 1, which provides salient features of the subsidiary company. Sir, certain exclusions or exceptions are given as per the Companies Act 2013. Now, which satisfy the criteria, then no need to preparation of consolidated financial statements. Even though my company is having subsidiary, associate, or joint venture, our company is having ultimate parent company. Our company is our company's interest is held by any other company, then no need to prepare the consolidated financial statements. In the given example, B Limited, C Limited, no need to prepare. Sir, not listed in the stock exchange either in India or at any foreign country, then at that point of time, there is not mandate to prepare the consolidated financial statements. Then we see in the provisions of accounting standard 21, whenever a company wants to decide to prepare the consolidated financial statements due to mandatory requirement as per the statute or the voluntary requirement, it should comply the provisions of accounting standard 21. Certain exclusions we've seen, if the control is of temporary in nature, that is holding company is going to dispose such investment in the near future. The holding company is going to dispose the investments in near future, then at that point of time, you should not, you no need to of considering such subsidiary in the preparation of consolidated financial statements. The reason is, if it is temporary in nature, means they are seeing such investments as a stock in trade, or maybe they are seeing such investments as a current investment. At that point of time, no need to consider such subsidiary into the preparation of CFS. And the subsidiary operates in severe long-term restrictions due to which it impairs the ability of transfer of funds to the holding company. That means maybe the subsidiary company is in the process of liquidation. At that point of time, the controlling power is missing by the holding company. That's why we may not consider such subsidiary company in the preparation of CFS. Hope you got it right. So now just I will confirm the content just now what we discussed in my OneNote. I don't want to read the entire text here. Just I will confirm one by one point, guys. Relevant provisions of Companies Act 2013. Company having one or more subsidiaries or associate companies, in addition to the standalone financial statement, they should need to prepare the consolidated financial statements of a company. Am I right? And such a CFS, which shall also be laid before the annual general meeting. I already told you, along with the standalone financial statement, CFS also laid down in the annual general meeting in front of shareholders. Okay. Then the company shall also attach, along with the financial statement, a separate statement containing AOC1, which explains the salient features of the financial statements of the subsidiary. I already told you. So actually, it will prepare the annual return of AOC4 CFS. The general companies which are not preparing the CFS, simply they will prepare AOC4. But the company which need to prepare the consolidated financial statement, they will adopt AOC4 CFS. Am I right? So such two things I already shown here. If you check here, two different forms are there. Form for filing of statement and other documents with the registrar, AOC4 is there. Here, form for filing consolidated financial statement, AOC4 CFS is there. Both are different. AOC4 is filed by those companies which will not prepare the CFS. AOC4 CFS will be prepared by those companies which we are going to prepare CFS along with standalone financial statements. Come back. So the consolidation of financial statements of the company shall be made in accordance with the provisions of Schedule 3 of the Companies Act 2013 and the applicable accounting standards. So how you are prepare the standalone financial statement, in the same manner you need to prepare the same Schedule 3 format. There is no change at all. Exemption from preparation of CFS, we already checked. If it is a wholly owned subsidiary or it is a partially owned subsidiary. Now my company having certain subsidiaries. Now my company is owned by another company. Right now I am also acting as subsidiary to another company. My company is a wholly owned subsidiary. That means my company is having a holding or parent company. Then at that point of time, even though I have other subsidiaries or other associates, no need to prepare. It is a company whose securities are not listed or in the process of listing on any stock exchange, whether in or outside India. No need to mandatorily prepare the CFS. It is ultimate or any intermediate holding company files CFS. Sir, ultimate or intermediate, these 2 points are same. Sir, ultimate parent company, anyway, it will prepare financials. Then why I need to prepare the financials? Because I have another holding company, even though I have another subsidiary, but I have another holding company as well. At that point of time, I no need to prepare the CFS. My holding company will prepare the consolidated financial statements. Am I right? Next, coming to AS 21 provisions. AS 21 prescribes the accounting principles and procedures for preparation and presentation of consolidated financial statement for a group of enterprises under the control of a parent. AS 21 is mandatory. If an enterprise presents the CFS, in other words, the accounting standard does not mandate an enterprise to present consolidated financial statements. I mean to say, AS 21 never provides that you should need to provide consolidated financial statement. But AS 21, once applicable, once a company want to prepare the consolidated financial statements, Once a company want to prepare the consolidated financial statement, such company should mandatorily apply the AS21. So it is clearly given that the accounting standard does not mandate an enterprise to present CFS, but if the enterprise want to prepare the CFS based on the voluntary requirement or based on the compulsory requirement as per the statute, it should need to comply with the requirements of the statute, or otherwise it should prepare the CFS as per AS21. We already discussed. Okay. Certain exclusions. Control is intended to be temporary because subsidiary is acquired and held exclusively with a view to its subsequent disposal in the near future. So maybe we are treating the investments in subsidiary as current investment or stock in trade. It operates under severe long-term restrictions, which significantly impairs its ability to transfer funds to the parent. We already seen such one. Maybe the subsidiary company is in the process of liquidation. That's why it's unable to transfer funds to the holding company. At that point of time, we may not consider the subsidiary into the consolidation procedure. Now, sir, if consolidation procedure, I mean, in such case, how the investments we are going to treat? AS13 will applicable. Sir, if AS21 is not applicable means, for such investment, which standard is applicable? AS13 accounting for investment is applicable. In consolidated financial statements, investment in such subsidiaries should be accounted for in accordance with AS13 accounting for investments. AS13 accounting for investment is applicable. That is the point clearly he is specifying here. Okay, come down. Where an enterprise owns a majority of the voting power by virtue of ownership of the shares of another enterprise, and all the shares are held as stock in trade and are required and held exclusively with a view to their subsequent disposal in the near future, the control by the first mentioned enterprise is considered as temporary. Just he is giving explanation here when the control is treated as temporary. I already explained when the control is treated as temporary. If the company is an investor company, then such company may treat the investment held in the subsidiary as stock in trade. At that point of time, we may treat that the control is only in temporary in nature, then we may not consider the subsidiary in the preparation of consolidated financial statements. Am I right? So I discussed the part of advantages. We see the different components of CFS as well: consolidated balance sheet, consolidated P&L, consolidated cash flow statement, and notes and statement and explanatory schedules. Now the only pending thing is consolidation procedure, which is the accounting treatment. Sir, what are all till now we discussed, which is not at all related to the accounting treatment. So the introduction part we deal basically in lecture number 1. Just now I dealt the pure introduction part, guys. Okay, sir, the real accounting treatment, the consolidation procedure, are going to start from the next video lecture. Until bye, have a nice day.